Hello ladies and gentlemen, welcome to my channel. My name is George Kingori. I'm your online finance guy who speaks about all things finance, and today I'm going to speak about how to retire from rental income in Nairobi, Kenya, and it's going to give you a few figures and a few facts that are going to help you as you endeavor to have an investment in real estate and rental income that is going to allow you to retire comfortably. Of course, for you to figure out how much you need to retire, you need, of course, to track your expenses, to forecast your expenses in the future, and any additional costs and any additional reduction of costs to be able to come up with a figure that you need to collect in rent so that you can be able to determine what type of investment you need to undertake. But I'm going to give you a guideline on how to go about it. Of course, one of the things that we need to speak about is what kind of housing are you looking to invest in. Low cost housing may be cheaper to invest in, may have greater profit margins as high as 15% going up, but the flip side of such investment is you may not be able to recoup your money, especially with an economic slowdown after coronavirus pandemic and such issues. Again, some of this low-cost housing may also be attracting kind of thug-like activities where people might want to get money from you and such other areas where you might find it difficult to be able to either collect the rent and may suffer from again political disturbances in case of political activity. So low cost housing may be cheaper to invest in, may have higher rates of return, but may be more problematic, and as you age you do not want a problematic investment. Again, the other investment that we need to talk about is the high cost kind of investment in real estate. Of course, the problem with this is you need high amount of money to be able to invest. Probably where you need to buy land is a lot more expensive. Again, the type of finishes that are expected, the type of building that is expected, you may need to invest a lot more. And the returns statistically in Kenya, they are not the best throughout the class, but you might need to invest a lot more. Of course, the good thing about this is the kind of clientele that you attract on high-end real estate investments may be the kind of clientele that will be paying their rent consistently without any issues and may not have any problems on collection of this rent. So you get high quality tenants and you're able to assure yourself of a consistent income. Again, you could have security such as getting advance payments on rent as security or collateral, even equivalent to 3 months or more, and such things are advantageous. But the rate of return may not be in tandem with this, but the collection bit of real estate investment in high net worth real estate is a lot better. So where do you stand? Your best bet would be on middle income housing. 2-bedroom apartments, maximum 3-bedroom apartments, around 70 square meters thereabout, such sizes, and targeted for middle income families, couples, and young families. That is where your market should be, because the thing is you might not invest too much money towards these investments compared to the high income luxury class of investments in real estate, and your collections, your rate of investment is actually the best in all the classes, and you are less likely to have defaults compared to the low income investments, and you may be able to go about it. Essentially, this is the safest bet for any person who is looking to invest in real estate. So middle income housing apartments, not bigger than 70 square meters, 2-bedroom, maximum 3-bedroom, in reasonable estates and locations within Nairobi. So not more than 10 kilometers to 20 kilometers away from Nairobi, and with relatively okay finishes. That will be your best bet. So middle income housing. The thing is, the middle income housing will be able to give you a return of 12% thereabout. So 12% rate of return on investment, which is a good rate. It's not the best rate you can be able to get in the real estate space, but it is a good rate. Again, 12% will be able to assure you that you get 1% of your investment is in rental income every single month. So how does this actually work out? The thing is, for you to be able to get, say, an income of 20,000 Kenya shillings every single month from your rental property, assuming that is the kind of money that can be able to, in retirement, be able to comfortably live off, then you will need an investment of 2 million Kenya shillings or $20,000 for you to be able to get the $200 income every single month. Again, this is okay money, not too much, but okay in Kenya to be able to survive and pay your debts without having any adverse expenses. So for the 2 million, you'll be able to get 20,000 every single month as return on your investment. So if again you need to, for example, make 100,000 in retirement every single month, then you need to invest 10 million Kenya shillings. This is inclusive of the land and the construction, basically the total cost of investment. So for 100,000 every single month, which is quite comfortable for a Kenyan old retiring couple to be able to live off, then you need an investment of 10 million Kenya shillings to get the 100,000 every single month. A lot easier. Again, middle income housing, and you'll be able to get your best bet, you'll be able to get this income every single month. So the best I can be able to tell you is do not invest in less than 4 units per investment. Yes, less than 4 units, because if the occupancy rates are quite good in Nairobi, meaning that you are more likely to have your house having a tenant, and you are most likely not going to have any big gaps in terms of occupational rates. So the occupation rates for middle income housing are a lot better. The average tenant in Kenya for middle income housing is going to stay for more than 3 years. Again, they are likely to be able to pay comfortably, not the best as the high cost client, but reasonably 90%. You'll be able to get 90% of your collections at this class of investments. So more than 4 units, and you'll be able to assure yourself of getting an income at 90% accuracy. So 90% probability that you're going to collect the total amount that you have invested, so the 1% return every single month, or coming to around 12%. Of course, there are several things you need to take into consideration. There are expenses that are involved in this real estate investment. The first cost is the maintenance cost. Maintenance cost is basically ensuring that the building as is able to maintain its look, is able to maintain its safety, is able to maintain its character. So you need a maintenance cost that is pegged to around 1% of the total cost of construction, or 1 month's income of the total investment for this class. So if your investment is 10 million, then you need to have 100,000 to be able to go towards maintenance costs. So this is replacing tiles, painting the building, ensuring that everything is working and is in tandem to ensure you'll be able to collect your rent. So 1% of the total investment, or 1 month's rent, to be able to go towards maintenance costs. The other costs that we need to speak about is security, because most of these places you need to have security. A security guard will be able to come in the evening to be able to check and ensure everything is okay, and you might need quite a caretaker during the day to be able to take care of this. So these are additional costs that you may need to incur. Of course, it's not a lot of money, especially in Nairobi, Kenya, but it's costs that may be associated with these kind of investments. And that's why I was saying you need to get at least 4 units, giving you at least 80,000, because you'll be able to pay some of these costs and at least remain with something reasonable at the end of the day. So security costs, caretaking and cleaning costs, maintenance costs, those are some of the things that you need to take care of. Of course, the other costs are related to utilities, water and electricity, that you can be able to pass down directly to your clients. So in Nairobi, the tenant pays for their water, the tenant pays for the electricity, and you can be able to pass down this cost. Landscaping and other costs may not be as much, because they might be taken care of by the caretaking costs and the maintenance costs that you have actually pegged down. So by and large, take care of these costs, ensure that you have invested in the right class of assets, and it could be on the way to better income. Of course, the other thing that you need to consider is the cost of capital. The cost of capital, especially if you're going to take a bank loan in Kenya, is going to be very, very expensive. So as much as possible, try to invest through your own capital injection, because otherwise you will not be able to get syndicated loans at low interest in Nairobi. So the cost of capital can be quite restrictive. So you would rather invest and be constructing slowly rather than take a loan, because again, the rate of repayment, so if you're taking a loan of say 14% and your return on investment is 12%, you might take a lot longer to be able to pay this loan, to pay down your capital, and you will end up struggling as regards to cash flow when you take a loan to be able to invest so that you can be able to collect the return. So you might suffer a cash crunch when you go the loan capital way. So ensure that as much as possible you try to do this project for a longer period of time and self-invested. That is money that you're actually getting and putting and building slowly by slowly. Again, construction projects, once received approval in Nairobi, can be able to go for 2 years. So once you get your architectural approval, your structural approvals, you can be able to go for 2 years without having to renew them. So for the 2 years, if you can be able to build a construction for 2 years, slowly by slowly, as you self-invest and reduce on the high cost of capital, then you could be able to easily construct this building. Of course, the other thing you need to check is the finishes and the size. Kenyans would rather have beautiful finishes and not as big a size. So size does not matter as regards to how much money you can be able to collect compared to the quality of finishes. Again, the problem with quality of finishes, the higher end the quality of finishes, the more likely you're going to pay more. So again, you need to of course check those figures. Of course, the other thing is taxes and allowable deductions. So as an individual, if you're going to invest as an individual, then individual tax rates are going to be a lot higher. If you're going to invest through a company, the tax rates may not be as high, but it may require you to have additional administrative costs, and you may need to hire an accountant or do this manual accounting process and tax justification at the end of the month, which may be a lot more hassle. Again, there are tax deductions you can be able to take advantage of. Of course, the investment deductions, the wear and tear that you can be able to put down through the tax authorities to be able to reduce your tax liability. Again, all these are costs that you need to factor in. Real estate may not be the best investment for a retiring couple because it may incorporate certain headaches, certain things that you need to take care of, but it is still a reasonable type of investment that you can be able to undertake in retirement. If you have any questions, any queries, any comments, leave them down in the comment section. Remember to subscribe to the channel because I bring fresh content every other day, and to like this video so that this information can be able to get to your friends. So thank you and enjoy your day.